The picture in the US, the optimists, as I say, are looking at these numbers and going, OK, the worst is over. Is that perhaps premature? How are you thinking about this?
Yeah, well, I think if you look at the last few data points, it shows a peaking of inflation. But I think if you break it down, if you look at goods inflation, yes, that has come down a lot because supply side management has improved, particularly shipping costs, etc. But when you look at service inflation, that's still quite sticky. And there is a lag effect between wage growth as well as service inflation. And I think that effect is something that's still quite hard to kind of predict. So yeah, we might get kind of a volatile reading in the next few months. And given, of course, the winter effects in the US, I think that could be inflationary as well. And of course, with China's reopening, that is also inflationary. So I think we are still not out of the woods. It looks like we are peaking in terms of inflation, but I think we still need a few more readings. But nevertheless, even if inflation were to kind of fall, it's not likely that it will fall back to the 2% target that the Fed wants.
The pessimists are saying, and even some of the optimists are worried about this, that irrespective of the data that we're seeing, Jay Powell and the Federal Reserve seem determined to keep their foot firmly on the brakes right now, when perhaps what they'd prefer to see is a little bit of lifting off that brake pedal. Are you worried that the Fed will overcook it and drag the economy into a worse recession than necessary?
Well, I think the Fed is just really data dependent. They are kind of calibrating and watching out the inflation data as well as activity data to be very kind of careful in terms of where they kind of raise rates. But I think where we think is that it's likely that the Fed would continue this path, but I think probably another rate hike next year, and then they would pause and assess the situation. So I think it really depends on how data pans out, and clearly I think rates now are quite restrictive as of now. So I think that would bring down demand in a significant way.